Hey, if you're wondering when to bet on small caps, we've got you covered. This is a great macro piece. I'm over at mapsignals.com looking at our latest macro insights of why you want to consider betting big on small caps. So let's get into it first. We all know that small caps have greatly underperformed large caps year to date, but check this out. On a 1 month basis, the S&P 600 it is outperforming the big cap S&P 500 on a 1 month and 3 month basis. But again, we do know that year to date, they have greatly underperformed. Most of you guys know the Magnificent Seven, those big large cap tech stocks, they are holding the market up. But let's see why we think small caps are very attractive. One, and I'm going to be quick, they are more cyclical. Two, they're less interest rate sensitive. We all know that interest rates are rising right now. Number three, there is rock bottom relative valuation. So check out this chart. This is comparing small caps versus large caps of their relative PE. And this is going back to 1995. If we're in this area above 1, that's telling you that small caps are rich versus the large caps. But right now we are well below the 1. And in fact, there is a 23% discount to the S&P 500's forward PE of 19.3 times. But let's keep going. Well, how do we know that the small caps could be a good bet? Well, whenever small caps have been this cheap relative to large caps, there is a 78% chance that small caps are going to outperform large caps over the next 12 months. Those are great odds on Wall Street, but let's keep going. There is an attractive absolute valuation. So small caps, they are poised to deliver solid gains. So here we're looking at the average next 12 months of the S&P 600 returns when looking at absolute valuation in quartiles. Right now we're in the second quartile, so we can expect over the next year an 8% gain for small caps. Now you say, oh, that's not that great. But keep in mind, we're up 20% since the market lows of October last year. So 8%, that's not that bad. So how do we play this small cap theme? Well, you can look at an ETF IJR. This is the iShares Core S&P Small Cap ETF. It's got a rock bottom expense ratio of 0.06%. Consider that relatively cheap to the 0.19% for IWM. Also, IJR, it has a higher map signals score, 59 versus 56 for IWM. Also, money is flowing into IJR. And more importantly, IJR gives you a great sector mix. 45% of the ETF is in energy, industrials, financials, and materials. Those are some of the most rising, strongly performing sectors in our data. You can see that snapshot here. Again, energy, number one ranking group, recently just outperformed technology on a basis. Also, if we look at the sector ranks by MAP score, you can see energy is the top rank. Industrials, materials, those have been climbing in our data. So this is a great sector mix to play for the big rotation that we're seeing. Last but not least, if you look at all the big buying and selling by market cap since May, look at this. Small caps have greatly outnumbered the number of buys that are happening in the mid to large caps. So the data checks the box, history checks the box. I'm betting on small caps. What about you? Remember, if you like this type of content, make sure to like and subscribe to our YouTube channel. And remember, none of this is personalized advice. I'll see you guys next time.